JC Parets, how you doing on this Thursday morning?
I'm doing great, guys. How are you?
We're doing good. Just to get started off the hop here, something that's IPOing today. I don't know if I know you're a price history guy, so you probably like to wait for things to shake out a little bit. But Virtue, the high frequency trading firm, have you been offered any shares in that IPO?
I don't touch any new offerings. So I
JC's
get
a
offered
chart
stuff
guy.
all the
There's no
time.
chart.
Yeah, not for me. Not for me.
We know you're a chart guy. We're not going to even ask you any fundamentals here because we know you don't care about the fundamentals. You care about what the price looks like. But what do you think about Netflix here trading up 60 points here? We know we got to give you some props here because you were liking the chart there last week when you were on the show. Obviously, this is just an incredible move up here for the stock. What do the technicals say here now with Netflix trading up at new all-time highs? What do the technicals say?
Yeah, I mean, for me, it's very simple. We ran up to this level, just under 500 three times. Originally at the end of 2013, right? If I'm not mistaken, actually early 2014. Then again last summer, and then again most recently a couple months ago. And quite frankly, I'm just in the camp that triple tops don't exist. And the more times a level is tested, the higher the likelihood that it breaks. So to say that prices are gapping up above that level, I can't say I'm surprised. I would be surprised if it wasn't doing that actually. So I think it's great. I told you guys, I like it. I still do. I think we're headed to 600. I think that's the level.
Would you be buying in here today, or would you be waiting for a pullback if you were looking at this thing? Because you think it's going to 600, so obviously you still think there's another potential 70 points here on the table. Would you be coming here buying it at the 530, or would you wait if you weren't
Well,
in?
I'll tell you quite frankly. I'll tell you quite frankly. You know what I'm going to do, and I'm not going to do anything. I'm gonna let it chill out. I'm going to see how it behaves. It could. I'm not saying this is going to happen, but it could very well just gap up and just fade all day, and that would be terrible. I doubt that's going to happen. I don't see that happening at all. What I think is more likely is we get a gap. We kind of trade within a range for a little bit. Maybe 5-10 point range for a couple days, couple weeks, something like that. It's going to be everything that they're talking about on TV and the Twitter, and it's going to make all the headlines, and everyone's going to get all excited and worked up over it, and we'll let them do that. And then once it settles down and they forget about it because there's a new story next week, Greece leaving, or something else that's taking up all the airtime. Once that occurs, then we'll get into it. But on a day like today, let the media have their field day. They're going to have a blast with this today. We'll let them do that, and then when they forget about it, then we'll get involved.
JC, how about running crude over the last couple days here? A lot of people looking for this 20, 30, $40. Well, it did get to 42 and change. Nice rip the last couple days here. Is this thing finally, turned, in your opinion, kind of finally turned it around on the chart, or is this just a rally in a bear market?
The buy was 3 weeks ago when I said we buy it. I sold it yesterday actually. I think it's hilarious. 3 weeks ago you couldn't find a single bull in oil. I loved it. We were in very very heavy. We were in huge. We did very well over the last few weeks in it. I was very vocal about it. I was a very vocal bull on oil. I loved it. Once we got back about the January, very easy risk reward. And then yesterday, I see everybody getting all excited about it. Oh, oil finally bottom. Say that. So we sold every single piece of crude oil that we had. So at this point, I want to see things settle down. We ran back up to the 55 level, which were the highs in I think late January, early February. People were just getting way too excited about it. So when I see all that excitement for no reason, when they weren't excited about it, when we were buying it, you got to fade that. You got to fade that enthusiasm. I hope it gets crushed. I hope it goes down 10 points. I would love nothing more. I don't think that's going to happen. I think the higher likelihood is. We probably churn up here for a little bit, maybe between 53 and 55. I'm speaking. I think that would be the best case scenario, and let it kind of bull flag up here a little bit, and then we buy a breakout to do year-to-date high. That would be my roadmap for me getting back in after selling it yesterday. So, you got to be disciplined. Structurally, I think that the bottom is in. I really do. I think we see $70, like I've been saying. But tactically, in terms of execution, we faded it yesterday. So
Was it targets? Did you have targets hit? I mean, just some kind of moving average or some kind of technical level, or was just JC digging down into his gut saying, "I'm trying to book some profits here."
Nope. These were the December lows, which were also the February highs. So when we bought it, this was the initial target. So we bought it 3 weeks ago when we talked about it, like March 19th or 20th or something like that. When it got back above the January lows, that was the buy. So now that we're back at these previous highs, and everyone's getting all excited about it, and now everyone agrees that was the bottom. Now you fade that. It's a beautiful thing. It's a flying demand.
Okay, semiconductor sector overall. Rob Hood is looking at the technical pattern of Texas Instruments, so let's look at that, and then we'll look at the SOX index. TXN here has been consolidating. Any thoughts on Texas Instruments or the semiconductor sector?
Looks great. I love it. I think it probably goes higher. I'm not in it. Doesn't mean that it can't go higher. I like it. I think it looks great. I think Texas is probably going a lot higher in terms of execution, in terms of risk management. The reason I'm not in it is because the risk management and something like this is hard. Which to me is really the only thing that matters. So at this point, where am I wrong is really my issue, and I don't really have that in a stock like Texas Instrument. What am I going to stop out at the March lows? So that's too much risk for me. I mean, you're looking at 4 points, so I can't buy that.
Okay,
but I do think it goes higher.
And the SOX here kind of bunching up here too at the 710 level. Any thoughts on just the overall Philly semiconductor index?
Yeah, I mean, same thing. I like it. I mean, they look exactly the same. The problem with semis is that they hit our target, in the first quarter. So, that's the 261 extension of the correction after in 2011. So, for us.
JC?
Looks like his phone dropped out on us. Let's try calling him again.
Okay, all right. We were on the line with JC Parets. He's the founder of Eagle Bay Capital, money manager, chartered market technician, technical analysis practitioner, and blogger here. Dennis, we're ringing JC once again.
Hey, guys. You hung up on me? You didn't like what I had to say about
I guess we didn't like what you were saying.
You didn't like what I said about hating on the semiconductors. Hating on the semiconductors, JC did not.
JC,
no.
I was going to ask you, JC. So we always ask, we're chats throwing symbols at you. What is on your radar here for today? What are you looking at? Because I know you look at so many charts there overnight. What do you like out there right now?
I like Canadian dollars.
Yeah? They really had a rally there yesterday.
Man, did they.
Did it take off because of oil? Moving opposite the oil.
Maybe. I don't think so. I mean, they do have some correlation. But man, my understanding, according to the Twitter, is Bank of Canada was supposed to raise rates and they didn't. I don't know, or they were supposed to lower rates and they didn't. I don't know. Regardless,
you like the chart.
The market loved it. Yeah, more importantly, right? It's very clear resistance. I mean, we've had very clear highs over the last couple of months. Nice little downtrend line in this consolidation, and quite frankly, I mean, you could have made an argument a couple months ago that this was a bear flag in the Canadian dollar, and we were going to continue lower. And when these flags, everything has to be, the market is very symmetrical. There's a lot of symmetry in the market, and this potential bear flag, if you will, was just really taking too long. And when they take too long, in all likelihood, it's not a continuation pattern at all, but a reversal.
Right.
Sorry about that, guys.
That was Virtue Financial trying to get in and they're
Yeah,
trading off
There
what you're
you go.
saying.
There you go. Yeah. No, listen. I mean, when these bear flags or any kind of flags really take this long and it's not symmetrical any longer, in all likelihood, it's a reversal pattern. And yesterday really confirmed that. We had some beautiful candles earlier in the week. That said that we needed to be long this, and we were. And yesterday was a great day. I mean, I can't emphasize that enough. We were very, very pleased, to see the behavior of the market yesterday. I got to tell you. So I think it heads higher. I think Canadian dollars are heading a lot higher. I think the dollar, you know me, I've been telling you guys for a month, I think dollars continue to weaken. They still are. I think the dollar gets slaughtered.
That's what I was just going to ask you. If you like, the Canadian dollar against the U.S. dollar, do you like the euro against the U.S. dollar?
I don't hate it, but if I'm going to be in anything, it's not going to be in the euro. It's going to be Canadian dollar.
Okay.
My big thesis, and I sent you guys our quarterly letter. I'm not sure if you've read it, but my big thesis in this quarter is the whole mean reversion in energy, base metals, emerging markets, dollar getting slaughtered. That's my big theme. The Caterpillars, the Freeport McMorans of the world. That sort of stuff. Copper, like that whole world. For me is you throw Canadian dollars in there for that matter too, with their commodity and energy exposure. But yeah, that's been the big one for me, and obviously that's been working this quarter, and I think it still does. I think that's my big theme: dollar getting slaughtered and how to take advantage of that. And euro is just kind of like a lazy way to take advantage of it, in my opinion.
All right, I'm gonna go over and ask you about the next stock, and in my prediction, Dennis, I'll bet you on lunch is that he's gonna say there's better places to put your money. But Caterpillar's been found.
But he just said he's like Caterpillar.
I just said I love it.
Caterpillar.
I love it.
Yeah.
Yeah.
JC likes that. Breaking out there yesterday. It was a huge day for Caterpillar yesterday.
I've loved it. I've loved it. I've loved it for a month. I've loved this thing. We're at the 2012 lows, which are the 2013 lows. Daily bullish momentum, part of my whole same theme, my emerging markets, base metals, energy, mean reversion theme. That's right in there. Great day yesterday too.
You know what? Do you pay attention to the ex-dividend dates? Because Caterpillar really ran up yesterday and it went ex-dividend here today. And a lot of times I've noted like a few days, a week before a stock goes ex-dividend, especially the ones that have a little heavier dividend, you see strength and then sometimes you see weakness afterwards. And CAT does have a 3.3% yield. So there's some participants in there that play for the dividend. It's interesting enough, it has its biggest update in a long time, the day ahead of the ex-dividend date.
It's something I pay attention to. Unless I'm short, because then I got to pay that dividend.
Yeah, exactly. Maybe that's what was happening yesterday. Everybody's short. They're like, "Get me out! I don't want to pay that 70 cents."
Speaking of short, and it's a name that we've talked about here. The 3D. Man, what a home run this has been over the last few weeks. Huge short interest. I mean, this has been a home run for us. I've absolutely loved it. This thing's a beast. Huge short interest. The shorts really got squeezed yesterday. I thought, if I'm not mistaken, I think 40% of the float is short. So I love that. We really want to see that when we're buying stocks. Huge short interest. I mean, who talks about 3D systems anymore? I think you guys asked me about it a couple of months ago, and I was like, ugh. But then things change, right?
Yeah, that did catch a nice pop. JC, we had you on a week ago, and this was the GE news was on Friday. What do you think about that financial engineering and GE? They got their stock back up over $28. Kind of been giving it back since then. What did you think about that move in GE?
Well, I don't know anything about any restructuring, but we bought puts on Friday. We bought put options on the at the end of the day on Friday because we ran into the downtrend line from the 2000 highs, and which coincidentally were the highs in late 2013. So we faded it very aggressively on Friday. Again, another great example of the media overreacting to something and falling in love, and you fade that enthusiasm. When you see the media falling in love with something at key resistance, multiple resistance levels, you got to fade that all day. And sure enough, we're down again pre-market. Yesterday, the market was ripping. It was down all day. We love to see that. That sort of relative weakness after such euphoria, I mean, that's beautiful. I mean,
What?
you can't draw it up any nicer than that.
How far out did you give yourself some time on those? Did you go or did you use something shorter dated as far as the put goes?
We went out to May.
Okay, give yourself a little bit of time. I know you haven't been that thrilled about the banking sector, but there has been some decent earnings out here. J.P. Morgan's been on a nice run. Citigroup, that was trading up here. Is it still a sector you're avoiding, or is this recent earnings surprises from these last couple banks making it a little bit more friendly to the sector?
Yeah, I'm not in it. I don't think I've traded financials even once this entire year. I'm trying to think off the top of my head. I'm pretty sure I haven't touched a single financial year to date, not even one. I mean, it's just a horrible sector. You know, there's so many better places to be. I mean, you want to talk about, just lack of trends. I mean, this is the sheer definition of that. I mean, if you've been in financials, I mean, you're not making any money. You know, you're probably losing money getting whipped around. So, I mean, yeah, there's a couple of examples. You know, J.P. Morgan more recently, but until this week, J.P. Morgan hasn't done anything. I mean, whatever over the last couple months, fine. But bigger picture, there's no trend. I mean, these things. I mean, there's just cleaner trades. I mean, look at that chart at J.P. Morgan. Is that really what you want to be trading? I mean, what a mess. Oh, I can't. For me, I need things clean. I need to be able to manage risk. I need to be able to say, okay, I like this as long as we're above this. And when I look at these charts, I mean, they're just so sloppy. It's just too hard for me. So yeah, I haven't touched these things.
Before we let you go, we're doing a show on biotech tomorrow, having some big names in the industry discussing this volatile sector here. Just looking at the IBB has come off. The sector did come off a recent all-time high, now climbing back. Any take on the biotechs?
Yeah, I'm not in it. They hit our upside targets a while ago and kept going. And there's a nice little trend channel that you can get going on the XBI from last summer if you want. That Friday, March 20th, we bought put options. When it gapped up on the open and started fading on the XBI, and then it got crushed the following week. We covered our puts that Wednesday, and I haven't been in it ever since. So, in all likelihood, it's probably going lower. I think I hope they do. I hope they get crushed. There's a lot of money made in biotechs. A lot of euphoria there. I would love to see them get slaughtered. I would love to see them a lot lower. I'm not in it. I'm not short. But if we can get an opportunity where there's a favorable risk reward, like we did on March 20th, I would love to short them. I think that there could be a risk reward standpoint. Selfishly. I think we can make a lot of money on the short side. It's just not set up. We're getting back up to that level where, where they originally got crushed. So there is market memory there. I wouldn't be surprised if we got crushed from here. But I'm not short. So, I hope we see a little bit more of a rally and, maybe give me a good opportunity to fade it. I would love to see, a 30% correction in biotechs, 20% correction, something like that. I would love to see that.
J.C. Parets, founder of Eagle Bay Capital, joins us every Thursday, giving us his colorful insight on the markets. J.C., thanks a lot. Have a great trading day. We'll talk to you again on next Thursday.
Thanks for having me again, guys. Talk to you next week.
Okay.
Thanks, JC.